Welcome to this week's Lucia Capital Group Weekly video. Now, the end of 2021 is approaching fast, and once we get there, there is very little you can do to change your income tax liability for this year. So now is a good time to go over some of the tax laws, and specifically the tax limits, that we have here before the year actually draws to a close. These are the things you need to be aware of and get ready for it to fill out that all-important tax return that's due in April. First, although it may seem quite a while ago, we had a last round of stimulus payments sent out earlier this year. So who was eligible for the $1,400 this past year? Well, the American Rescue Plan, or ARPA, signed into law by President Biden on March 11th, qualifies you and your dependents for the full $1,400 payment if you're an individual with an adjusted gross income of up to $75,000, you're a head of household with an AGI of up to $112,500, or you're a couple filing a joint return with an AGI, adjusted gross income, up to $150,000. So for example, a couple with 2 children that earns $100,000 and files jointly would receive $5,600. That's $2,800 for both adults and $2,800 for both children. What's more, the relief bill includes a provision that allows any person who gave birth in 2021 to receive that additional $1,400 check for the baby. Now, after the baby is born, the parents can receive that additional $1,400 when they file their tax return in 2022, the 2021 tax return, now assuming their AGI falls under the limits I mentioned a minute ago. But what if you didn't qualify to get your check because your 2020 income was too high, but your 2021 income is lower? Well, the good news is that if you can keep your income in 2021 under the limit, you can claim this credit on this year's tax return to either increase your refund or reduce what you owe when you file. Now, here's another more obscure tax that many people overlook: the net investment income tax, or NIIT. Simply put, as an investor, you may owe an additional 3.8% tax if you have investment income and your modified adjusted gross income goes above a certain amount. So if you've got net investment income, such as short or long-term capital gains, qualified and non-qualified dividends, taxable interest, passive income, rental or royalty income, and a few others, and your adjusted gross income is over $200,000 for a single filer or $250,000 for a married couple filing jointly, you may owe this extra 3.8% on your net investment income that comes in above these thresholds. How much you'll actually have to pay is based on how far above those NIIT limits you actually are. If your adjusted gross income is only a little bit over, you'll probably owe less than somebody who's high above that limit. The actual workings of it can get a little complicated, but you need to know that if your AGI is high enough and you've got net investment income, you may get the privilege of paying that additional tax. Now, one way to get that net investment income down may be through a technique called tax loss harvesting. This may work really well for somebody who's got some stocks that are worth a little less than they currently paid for them. The idea is that you sell an underperforming investment, one where you get a loss instead of a gain, and then use that loss to reduce your other taxable capital gains. And that will potentially offset up to $3,000 of ordinary income as well. Of course, as with any tax strategy, there are certain pitfalls to watch out for, like restrictions on what type of losses you can offset, as well as something called the wash sale rules, which will affect your ability to use this strategy. But it's something to consider here as we wrap up the year. One other tax limit you should know about is in regards to the income-related monthly adjustment amount, or IRMA. We've mentioned this a few times before, but it bears repeating. If you're currently covered under Medicare and your adjusted gross income in 2020 went over $91,000 for a single person or over $182,000 for a married couple filing jointly, your premium in 2022 will rise to about $238 per person, an increase of $68 per month over what most others with less income will be paying. The IRMA will increase from there if you go past other thresholds as well, and it caps out at around $578 per person per month. Yes, it's a weird calculation that's based on your income from 2 years ago, but that's how it works. Now, the good news is that in some cases, that increase is only temporary if that extra income was a result of a large one-time capital gain. But you do need to be aware of the increased tax either way. Now, what you need to know is that by controlling your 2021 income, it could have an impact on the Medicare premiums that you pay in 2023. So what does all this have in common? Well, avoiding or managing these issues and others means understanding what your tax return will potentially look like before you actually file it. Now we're close to the end of the year, so you don't have much time to help manage this year's tax situation. But one thing is for sure, come January 1st, there's very little you can do to be able to manage your taxes for 2021. Now, if you need more guidance or if you'd like to get a handle on managing your taxes going forward, give us a call here at Lucia Capital Group. We can help you with all of this. We do this every single day. How can we help? Just let us know.